This show was produced by Martin & Co. and is for information purposes only.
Hello. In this episode, we are talking to Nicholas Weindling, manager of JPMorgan Japanese, who's here to talk to us about Japan. Now, Japan is one of those markets that a lot of people neglect, but it is surprisingly large. Third after the US and China, with a lot of stocks to choose from. I mean, how does anyone decide what to put in a portfolio?
Yeah, you're absolutely right. Japan is an incredibly broad market. There's actually in total roughly 4,000 listed companies in Japan. Even if you took that down to kind of more liquid options, you'd still be looking at a huge range. It's also a very, very broad market. We don't have much market concentration like you see elsewhere. So there's an incredible range of options. I think that we are incredibly fortunate to have a very large team based on the ground in Tokyo. We've got more than 20 people. It's highly unusual actually to be based in Tokyo. And the average experience that we have is over 20 years. So we've got that resource enables us to sift through, whether it's at the very largest end or all the way down that market cap to make sure that we've got the very best ideas into the trust.
Okay, so deep resources, that makes a lot of sense. Next thing I really wanted to touch on is, obviously the way the economic environment has changed. So, we're now in a situation where it is clear that Japan has sort of persistent inflation for the first time in decades. What is that doing to the economy, and what is it doing to people's mindsets?
Yeah, I think it's hard to overstate the importance of the shifts of really Japan just normalizing. I've lived in Japan for over 20 years. And for the overwhelming majority of that time, we've had deflation, prices are going down. Actually, 2025 was the first year that, there's a line on my bank statement which says interest with a positive number there.
Right.
And deflation is very difficult because it's always better to wait to do everything. Yeah. It's going to be cheaper in 6 months, cheaper in a year. So that inflationary environment where prices are going up, wages are going up, and most people in Japan for the last 2 decades have seen no change to their wage. So the fact that we've got strong wage growth now over the last 2 or 3 years is a major, major shift. And that feeds into how people think about how they have their own investments. So the average Japanese person has got about 55% of their money in cash, which in a deflationary environment is fine. Yeah. But in inflation, you've got to think differently. And actually last year is the first time that we see quite a big pickup in people putting money into riskier assets. I mean, really anything except cash.
Right.
And that's a major and important shift.
And I guess how are sort of corporates finding it in terms of being able to pass on these sort of inflationary increases? You're talking about the wages going up. I mean, are they able to do that? I certainly remember a time when companies were apologizing when they had to raise prices. Is this still a thing, or corporates working through that?
No, I mean, you're absolutely right. A few years ago, I remember the board of a tomato ketchup company coming on to being in the news headlines, apologizing, bowing on the TV screen for putting up the price by the equivalent of about 10p. And because they just never done it before. But now we see that has become normalized. There's no issue passing costs on people, and that people expect prices to go up. Now that causes its own issues, prices rising. And similar to the UK, Europe, the US, there is something of what people here would call a cost of living crisis for some people. But overall, it's normal that prices go up, and Japan is becoming a normal economy with normal monetary policy.
Awesome. That makes a lot of sense. Now, we were sort of talking briefly about, wages rising, etc. I just want to come back to what is the balance between sort of inflation and wage rises? And you're saying you're sort of seeing it in people's savings. I mean, what's happening? Are people sort of running scared and are they saving more, or are you seeing people spending more? What's happening on the ground?
Yeah, I think, let's take the last point first there. So prices are rising. One of the things that's been happening in Japan over the last few years is that the currency, the yen, has been very weak. And when I come to the UK and I buy, a prep sandwich and a water, and it's cost me, I don't know, £8 or £10. I contrast that to Tokyo, where I can have a sit down hot lunch with 2 courses for a fiver. It's very, very different. A zone 1 single one when I go to work costs me 70p back home in Tokyo. So it's very, very different. The issue is that because the currency is so weak, the price of imported items has gone up a lot. And Japan imports all of its gasoline, all of its energy. It has no commodities. A lot of food is imported. So although wages are rising, people don't feel that benefit. And that's the thing. So people in big companies, their wages have been rising about 5%. This is very good. We expect the same to happen in 2026. But for people in small companies, and the overwhelming majority of people in Japan work for SMEs, they haven't seen wage hikes, but not to that degree. So that is a key issue with that. We haven't seen a pickup in consumer spending yet, for example, in Japan. I think it is important to say that although the Japanese economy has not really grown now for 15 years, I mean, it's an ultra mature economy, there is no link between economic growth and stock market performance.
Okay.
The overwhelming majority of Japanese companies are global companies. The global economy is much more important. If you look over 15 years, no GDP growth. The earnings per share growth in Japan has been the same as the S&P 500.
Right.
A lot of people find that a very surprising thing that
that is because there's no statistic.
It's a completely different set of companies. So it doesn't really matter what is going on in the domestic economy from this aspect anyway.
Okay. So I suppose if we look at this from the sort of perspective of, the sort of Japanese investor in that case, Japanese domestic investors have a significant presence in the sort of Japanese stock market. As we said, they're not or haven't been getting sort of real returns on cash. I mean, you're sort of starting to see that a bit more. You said you've got a line of interest on your bank statement. To what extent is this sort of showing up in the stock market?
Well, I think you've got to remember that the overwhelming majority of people in Japan have never owned a stock, and they have never owned a mutual fund.
Right. Okay.
So, if you go back to the Japanese bubble, which burst in 1989, that's when the Imperial Palace in the center of Tokyo, very near our office, which is actually where I go running, that was worth more than the entire state of California. And from that time, property prices fell 75%. Stock market was in the doldrums for a couple of decades. And it is new now that the stock market has finally hit a new all-time high in Japan. Property prices are starting to rise. And people, that kind of memory of what's gone on in the past isn't so strong anymore. And so you do see younger people starting to invest. And again, things become more normal. And this is entirely positive.
Okay. Do you think maybe there's sort of generational shift there, perhaps?
Yeah, I do think there's a generational shift because even at the corporate level, there's an issue where Japanese companies have very conservative balance sheets, have a lot of net cash on them. But it's interesting to think about, why do they do that?
Yeah.
And many of those companies which would have been formed in the 60s, 70s or 80s, the really faint companies that people on the streets here would be able to name, companies then experienced that bursting of the bubble, and they could not borrow money from the banks. The banks in Japan were essentially bankrupt for around 15 years up until 2005. So companies had to be able to do it by themselves. They had to finance it themselves. They got the cash. But that generation, who now are in their probably 80s and 90s, they're now passing the baton on. And that younger generation can mean in 60s and 70s in Japan. That's why I like living there, because I feel young. But that younger generation, that new cohort of managers don't have the same baggage. They don't think about things in the same way.
Okay, that probably leads us very nicely on to the next question. So I really want to talk about the whole sort of corporate governance theme in Japan. So, I mean, for many decades, Japan's been known for the sort of background of poor corporate governance, but things are sort of clearly changing. I guess, what does this mean for you as a sort of portfolio manager in Japan? And so how do you take advantage of this?
Yeah, I think it's impossible to overstate the importance of this in terms of investing in Japan. This is a multi-year theme. It is very specific to the Japan market. Maybe Korea has something similar, but that's really it. And what we have here is, firstly, a kind of two-stage process. One is that companies are improving their balance sheet efficiency. That means reduce the amount of cash they have, sell down shareholdings, because that's been a big feature of the Japanese market. Companies own shares in other companies. and sell real estate that they don't need, and makes them very kind of asset heavy, make those balance sheets more efficient. That can address problem number one in Japan, which is that ROE has been below the levels of other developed markets. And we're already making good progress there. Japan's got very rapid dividend growth, huge share buybacks. This is very good. We're now going into a second phase, which I think addresses the other key issue in Japan, which is that operating margins for Japanese companies are below the levels of other developed markets. Even if you adjust for the different sector mix, similar companies in Japan will be making lower margins than their brethren in Europe or the United States. And what we now see is companies closing down those lower margin or loss-making divisions and improving their business mix. So if you put those two things together, you should see the ROE go higher and the operating margin go higher. This is a very positive combination. So in the best case, what I hope we can find in JFJ is a combination of companies that are structurally growing. And if we can then get a balance sheet story and restructure the business and put that all together, those are some of the best stocks, because you're going to have the earnings growth and you're going to get a re-rating at the same time. And for us, if I compare the trust to, say, a decade ago, it's really opening up our opportunity set. You know, sectors that we wouldn't have really looked at or really didn't fit the criteria to look at, we can now say, okay, well, if this company does A, B, and C, they will be on the path to quality. We can start to think about how this company might fit in the portfolio. And that is very exciting.
And presumably, with these improvements, would it make some of them M&A targets, for example?
Well, one of the truly remarkable things in Japan, and I didn't think I would ever see this in my career, is that we see management buyouts now. We see hostile takeovers. We see listed subsidiaries of big companies being bought out by their parents. And what it means is that, I spoke about the large number of companies listed in Japan. Last year was the first year in many, many years where we saw a significant decline in the number of companies listed. And what is effectively happening in Japan is that there is now a market for corporate control. There is a way for value to be realized. And this is just transformational. I didn't think that, JFJ is a quality growth portfolio. In the last couple of years, we've had half a dozen companies that have been taken out in one form or another. In the previous 18 years, we'd have had zero. It's a really big
shift.
It's a huge shift.
Okay, so I don't think we can sort of come and talk about Japan today and not discuss the sort of snap general election. I guess sort of big questions are, why has this been called? And so what does it mean? What does it mean for Japan?
We take a step back. The previous prime minister, a gentleman called Mr. Ishiba, he became very unpopular as a prime minister because of this cost of living crisis. People feel like they're struggling. And as a result, he resigned, and the ruling party elected a new leader, a lady called Takaichi. She is remarkable because she is the first female prime minister of Japan. I think it's amazing that Japan has had of many Asian countries in the US in that respect. She gets a lot of attention because she's a heavy metal drummer. But there are actually far more important things to know about her. She was a big fan of Margaret Thatcher. She was an acolyte of Shinzo Abe, who led the big reforms in Japan during the twins. She got a very distinct agenda. She is right wing. I mean, it's not even a question about it's a question of how far right is she. And she is very telegenic. She's not, a grey suited old man. She's very good with the press. And importantly, she is extremely popular. Her support rate, personal support, is over 70%. And with certain groups, young people who are quite, who are not that interested in politics, her support rate can be over 90%. So what she's hoping is, she calls this snap election. She's currently the ruling party as in a coalition. She can increase the number of seats and she can push through with her agenda. And she has some very clear policies that she would like to push through. Overall, these are very market friendly. It's not like there aren't some risks to it, but in aggregate, these are very market friendly policies.
So presumably you look forward, assuming this all comes to pass, to a sort of more business friendly environment. I mean, this is really what we're saying. I guess.
Yeah, I mean, we are very long term. And right now we are talking about the election is going to happen in the next couple of weeks. But things that she would like to do are, firstly, help people, working people who are struggling. So one of the proposals is to cut the tax on food, VAT on food to zero. So that could help there. She also wants to dramatically increase spending on areas like defense, shipbuilding, national security issues. Not so dissimilar, actually, to what you would see in Europe and the UK as key issues at the moment. But that's her agenda. It could be very successful. I think importantly, whatever happens, we don't see any risk to that corporate governance change that I was talking about.
Yeah.
That's so important. That will continue on, we think, regardless.
Okay. But has this sort of facilitated any changes in the portfolio? Obviously, you've got a very long-term mindset, but has any of this sort of influenced your thinking?
Well, not so much the fact that this election has been called, but one very significant shift I guess we've made in the portfolio in the last couple of years is to start to invest in companies related to the defense industry.
Yeah.
Now, Japan doesn't have a military. It has a self-defense force, and historically spending on defense has been extremely low, just 1% of GDP.
Yeah.
But everyone listening to this will be aware of all of the geopolitical issues going on in the world right now. Can Europe, can the UK, can Japan, can they depend on the US like they used to in the past? Can we depend on US equipment? So Japan is planning to step up its military spending, and importantly, from an investment point of view, step up its spending on Japanese equipment.
Yeah.
And we have large, heavy industry companies in Japan. These are companies that in my entire career, we have never invested in, that have been horribly managed.
Yeah.
But now these probably have some of the strongest structural growth outlooks of any companies in the market over the next 5 to 10 years. So you get the top line growth.
Yeah.
You get the government saying, well, we understand we need this industry. We're going to allow you to make a decent margin. There's a potential for them to start exporting, which they haven't been allowed to do in the past. And if you can combine that with the things I was talking about earlier, like a balance sheet restructuring or a business restructuring, which is what you see in our biggest position that we have, which is a company called IHI, which is a heavy industry company, then that's really the kind of the package that we would ideally like to invest in.
Almost as a virtuous circle, in fact.
Exactly. And there's a big change gone on in expectations there. You've got a big change in expectations on top line, big change in expectations on the margin, but you've also got that company that has shut down 12 divisions. They were making things like lawnmowers and cranes, and if stop doing that, let's focus on defense. And they also involved in aircraft engines. That's a very high quality, good margin, free cash flow business. Exactly the type of thing we're looking for.
Makes a lot of sense. Now, just wanted to have a little chat about portfolio. We've obviously covered quite a bit of ground, but what sort of things can we currently find in the portfolio? So what kind of companies do you like at the moment, sort of beyond the defense that we've covered?
So the other areas that are important for us are areas like, there are companies that are very unique to Japan. Do you really get there? So if you think about the quality of Japanese intellectual property, think about Pokemon or Super Mario, or how popular things like manga and anime are becoming even here in the UK. So those companies, like Nintendo would be a classic example of that. We've got very strong brands in Japan that are expanding globally. If I look at the results from Uniqlo, which is a clothing company making everyday items, they're competing with Zara and H&M, but their sales are being heavily driven now by overseas sales. Particularly, they even called out their new stores in Glasgow and Birmingham as being particularly successful. I was at the AGM yesterday. A gentleman came up to me and said how happy he was with his new purchases from the Watford Uniqlo. Really? But that company has such a long growth runway. It's very well priced, very good quality. These types of companies are things that we're looking at. And then you've got companies, within the AI supply chain. Some Japanese companies will have 100% market share in the products that they're making and then supplying into NVIDIA. And then there are areas which we would have been very cautious about a few years ago. Areas like, for example, banks. In a negative interest rate environment, that is tough, really tough. Suddenly, interest rates are rising. There's demand for loans, which we haven't seen, and they're going to optimize their balance sheets by selling off shares that they own in other companies. That can come back to shareholders. So it's in different areas
Yeah.
than perhaps 5 or 10 years ago, where you'd have been very focused on things like classic growth areas like e-commerce or fintech. I'd say in a nutshell, the nature of growth can change, and the places that you can find that growth can be different over time. We are very, very fortunate to have such a big team, both in Japan and globally, because that what we hear from our global analysts can be so important in giving us that conviction in pushing on certain stocks, where we get that the view from all our analysts globally. That this is a real strength for us.
Well, that's fantastic. I think you've given us a really good summary. So thanks once again for that. And so hopefully we can get you back in the future and give us an update on how it's all going.
Yeah, that would be great. Thanks, Matt.
Brilliant.
This show was produced by Martin & Co. and is for information purposes only. It is not intended to encourage the reader to deal in any of the securities mentioned in it. QuotedData is a trading name of Martin & Co. Limited, which is authorized and regulated by the FCA. Martin & Co. is not permitted to provide investment advice to individual investors. The show's contents were compiled from publicly available information. The show is not directed at any person in any jurisdiction where, by reason of that person's nationality, residence, or otherwise, the publication or availability of the show is prohibited. Please remember that past performance is not necessarily a guide to the future, and that the value of shares and the income from them can go down as well as up. Exchange rates may also cause the value of underlying overseas investments to go down as well as up. Martin & Co. may publish on companies that use gearing in a number of forms that can increase volatility and, in some cases, to a complete loss of an investment.